The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to a beautiful February 8th at the headquarters of Technical Trading and Investing. This is TFNN.com, your squeezably soft host, David White, for the Power Trading Hour. And we're having a good day out here, although I hear people up north are going to feel a little bit of snow. We are out here with a market with a very light volume, normally you want to see light volume going into a weekend on the down note if you're bullish, and you want basically light volume going up if you're bearish. Of course, we've got a lot of people probably pulling their money out in the Northeast and trying to get cash flat. Seeing a market up that, up 7 points, so no, not that big a deal, but we are breaking higher highs out here, and the volume is light. We are less than let's call it 2.0. Let's call it 2 billion shares for the day. Extremely light. A big warning signal if you are long, and we'll talk about that later. But we got a nice market out here and light volume. Of course, probably some organic reasons for that. You can debate it. Everybody that I've known since back in the early days of price and volume trading has always said, take the volume as it comes. I think that there's a few things you can do about it, but normally, especially before you go through a weekend, you have to watch it, and normally it's counterintuitive. Light volume normally points to the direction on the opposite side. I am short many stocks in the daily Path of Least Resistance newsletter, and got a couple of them that look like they've already broken today and closing down on the lower end. So why there are some big stocks out there that we'll be talking about, like Google and Generac and some of these other ones. In fact, Generac, let's see if I can get a symbol for that. Generac, is it? General Electric, maybe I'll figure it out. Generac. General Electric. What is the symbol for Generac? Maybe somebody in the den can post it. Oh, there it is. GNRC. I add that to my list to look in, stuff to look in out there today. But we're going to have kind of an interesting market. It is probably going to be fairly quiet out there to the end of the day. We're going to take a look at some other stocks and see just how they're doing. But not a lot of movement out here. Kind of a quiet day. A lot of people trying to get out of the market. We'll see how that does. We are looking at some stocks moving fairly well. Not a lot of, let me see, how can I put this? Not a lot of real news in the market. It's been kind of quiet. Looking through it, not a whole lot new out here. Maybe a little bit about Boeing, but that's just very light. We're going to look at the charts to see how a lot of these stocks are doing, at least the ones that are moving more strongly out here. Let's see if we can get this thing going here. First one we want to look at today is Adobe. Adobe is trying to break out. Not a lot of volume out here. It did break out on very strong volume back on the 14th of December. It's been kind of meandering its way up. Nice big candle, but certainly not the kind of volume you want to see yet. Again, when you see breakouts of these kinds of consolidation patterns, you want to give it about 3 days. If it can't give it 3 days, most likely it's going to come back in the trading area, trading path. Another one that basically dropped the chalupa last night was Coinstar, CSTR. When we look at this stock, again, getting back down to the lower end, but certainly going to do it on much higher volume. strangely enough, I signed up for the beta test of their online video streaming service and actually got the go-ahead last night, basically shortly after their after the earnings announcement last night. And actually signed up for it and checked it out. It's going to be $8 a month. First month was free. Looked through all their movies, and boy, am I disappointed. Service seems to work fine, and it does deliver HD video, okay. But just when I look at it, underwhelming, I would say, for their video offering. And basically their forecast is going to be weaker for the times to come. Down on a heavy volume on what looks like a light volume day. Looks like it's finally going to work its way back down to that $40.50 low that we saw on huge volume from the October 26th low. We were short this once in the daily newsletter. I've been waiting for a decent setup to come back. Actually gave a fairly decent signal at $54.11, and earnings were coming, so chose to avoid it. Another one moving out here in this market is, let's see, what do we have here, is Dollar Tree. These have been pummeled since they came off their highs. In case Dollar Tree was the June 20th high last year. It's been kind of bouncing around. It had a huge spike out on August 16th, which I think was some kind of circuit breaker blowout from that day, and probably a bad tick that'll never be taken out. Anyway, been bouncing around those lows for a while, and you know, did you have kind of a little lower test out here? Yes, you have, but I still look at these as kind of dead cat bounces. Again, this bounce is happening out here today without any volume, so you need to really be watching some of these. Way the cat is away, the mice will play, and a lot of these stocks out here that are moving today, 2-3% or short squeezes on no, if any, volume out here. In fact, I've got one stock out here that normally trades 1 million shares, and let me see what the thing is trading out here at today. Let's see, 336,000 shares. So, I mean, a lot of these things are just trading very, very low volume, maybe off 50% or maybe off 1% or something. So I don't know if you can read too much into this. I think we're going to read a lot more when we come back on Monday. But many of these stocks are headed for the lows, while a handful of stocks are driving the indexes higher, again, on very light volume. So like a house built on sand, don't know if it's going to go that way. Generac Holdings making, I think, an all-time high out here. These are the company that makes generators. I actually had one of their generators for about 10 years and actually bought one of their standby generators for my home up north. GNRC, of course, they make these gas, actually natural gas or propane backup generators. Of course, anytime it looks like a storm's coming, a lot of people like to buy this. But what you don't like is this high on-liner volume out here. It did pull back, what, $8 or so from the big storm in the Northeast last time. Shot up to that $39. Cursed myself many times for not remembering to jump on this thing, because it's been a real player. Every time that there is a natural disaster, everybody's looking for power. But again, very, very light volume, a fourth, a fifth of what it was before. So look for this thing. They're basically building everything they can. I don't think the news can get any better for them. So the question is the time to sell Generac? I would think you're fairly close. It's not like they're going to be able to double the production over the next couple of months. And a lot of the money and deals, especially in the Northeast, are in already. So I don't know if the news can get that much better. Probably better looking at other stocks, and no, I wouldn't be shorting it. But maybe all the good news is LinkedIn came out with earnings last night. They're actually talking about raising their rates, and of course, anybody likes a market or a stock with pricing power. This thing's taken off, and one of the few that has taken off with huge volume. What you want to be doing is putting a buy-in at least a reminder back in when this thing comes back between 130, 135, which it probably will, maybe take 3-6 months or something. When this thing does come back and come back on light volume, this would be the next time to buy LinkedIn out here. One of the few social media companies that's figured out how to make money, and that is they charge the businesses to find people to hire that are specific to their business. So we continue to look at LinkedIn as a outlier in a social media. When we look at Facebook, who single-handedly brought the internet down for a couple hours last night, not a whole lot of movement in Facebook, but we'll continue looking at that. Still a lot more rumors. We had a caller on Zynga, and I said, I think it was either Tuesday or Wednesday, I said probably 3 days we'd be right back into this $3.27 move, or 340, somewhere in there, and certainly got it today. Maybe he'll call in and let us know if he sold it, but I think probably today would have been a good day to go ahead and ring the register on this thing. One thing you are having is a decent volume in this stock. You certainly are running a lot of the shorts out, and decent news on it. I think when I was talking to him, I hadn't heard anything about online gaming being passed, and what do you know, as soon as I talk about it a couple hours later, my understanding, the New Jersey governor basically was giving a papal blessing to actually approving that, although I don't think he has officially blessed it. But nice volume out here, and certainly Zynga is back into this gap, but probably going to find a lot stiffer resistance anytime higher out here. Microchip Technology, another one that's taken off here to the top. Lots of volume. It is up to the previous high of March 30 of last year. That had 1.4 million shares. It's basically going to close right back underneath that area. So we want to be taking a look at that one. But not bad. MCHP, you want to be watching at that. Some of the losers out here. Nuance Communications. This is the company that made the software for Siri. A lot of people thought that this meant that they were going to the moon. Just never really ever ended with that kind of outcome. Basically, their forward-looking earnings and outlook were just horrible, and this company's come down with monstrous volume. It has blown out the lows. A close below $19.33 is going to be a huge sell signal. That's the last June 4th low out here. Let's see if we've got anything on a longer scale out here. It takes you down to $15.56 in a long-term gap out here. But looks like this thing is pretty much, you can see where Siri was introduced back in August of 2011, or the rumors of it. This thing went all the way to the February 9th high of 2012. When the thing didn't quite work like everybody thought it did, started to gap down. It's been working its way lower here for a while, but thinking it's going back to right where it started, around that $15 level over time. We've got a lot of stocks to look at. We'll be coming back. Give me a call, 877-927-6648. That's 877-927-6648. Give me a call.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we have another quiet day out here, looking at volume, now going over 2 billion shares on the day. Looks like it's going to be an incredibly quiet close out here in the market. I don't see a lot of movement one way or the other. I wanted to talk about a couple of things. One is the Tech Insider, where we track technology stocks. One of the strongest in the sector of all technology has been 3D printing. Hopefully my engineer can do me a favor here. And that's come and grab one of these little things that are in here and hand it to me. I forgot to actually drag it over to my desk and get it. But one of those nice little X1 things here. But yeah, he put his hand in the shot, so he gets $10. So anyway, the X1 symbol is XONE. We did buy this in the Tech Insider and just wanted to talk a little bit about it today. It is like DDD and SSYS and just a huge mover. We bought it in the newsletter at $18. We are out of it already. Wanted to just go ahead and take it. I did probably about 40 hours of research on this company over several weeks to make sure it was real, everything else, and probably a huge blowout, a small IPO, small enough that the big guys didn't come in and run it all up, and large enough that it actually was worth playing. Has been a huge one. Opened up about 24, has gone to a high of around 33 out here. We're waiting for it to pull back now and probably take a while. But one of the first IPOs I've played within the first couple of days. The play on this one was to buy before it went public, and you could get them at really it was supposed to price out somewhere between 14 and 16 bucks. Ended up pricing out on the high end of the range. They even added another 20% of the shares, and it went out, but nice. But anyway, out at 18 bucks, and probably a football here for a while. But if you're watching, actually call the company, acted like a customer. They make a 3D printer. It's a little different than everybody else. Their cheapest 3D printer is $500,000. They go up to $1.5 million and even more. But what they're a little different is they're going after the industrial, huge size printing. And they can print something about, I think it was about 400 inches by 200 inches by maybe 250 inches. I'd have to go back and look at it. But they were nice enough to send me the sand casting. But what they really do is able to print in sand and make molds for industry. So if you want to, you need to make a manifold, or you need to make an engine block, or you need to make a bunch of other things, you can print it in casting sand. And it basically, it's got like a little bit of hairspray that it sprays on it after it lays down one level of grain of sand per pass. It'll build it all up, and you can make giant things out of it. In fact, I think the biggest thing they've had come out of this thing is about 260 or 280 pounds. So they make very large equipment, a very small company so far, but a lot of times, in fact, I think MCP is the last real IPO that I played since, so that's what, 3 years or so. These are very rare, so don't go out chasing all these. But got to get a little drink here. But a very interesting company. Probably a lot of the meat is off the bone on this one, but it is another one in that sector if you want to play it. I think we're probably due for a huge retrace in that sector, and I'd like to get some of these stocks again when they pull back. Probably well overblown, and let me put it in a bubble. But we'll be watching for these. So not a bad time to actually be buying some of these IPOs if you can spend enough time researching it, calling the companies. I went out and looked at their product up in Orlando, actually did a lot of research and called many of their locations to basically find out what they did, how they answered the phone, where they real. A lot of these small companies really tough to find out, but worked out well for us. So we'll be looking at that more tonight as we talk with Tom. But a huge mover for us and a huge win, and probably pretty happy, let me put it that way, doing my little superior dance out here. Anyway, we wanted to get into some other stocks, so let's do that. Seagate Technology, another one of these that has gone to higher highs in the marketplace. STX is the symbol on this one, and basically everything above 32.55 for the most part has been kind of a false breakout on this. We're going to get to it when we come back. Give me a call, 877-927-6648, 877-927-6648.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we've got a phone call. We're going to go to Brent in California today. How you doing, Brent?
I'm doing good, Dave. How you doing today?
Pretty good. Are you the one with the options on Zynga?
Not anymore, thanks to you. I got out today.
Cool.
Actually, you called it well as far as the timing and the price was spot on. So.
Normally, if you get that huge move and gap up on heavy volume, you got about 3 days. You're going to have lots of volume today, but normally the third day is an exhaustion move where you want to go back and try to buy the pullback if you get one. Part of this was, I think, pretty lucky. I think right after I talked to you, I saw maybe 4:30, 5 o'clock that night, a one-liner about who's the governor of New Jersey, the real big guy.
Christie?
Yeah. About him talking about possibly signing off on online gaming, and I knew when I saw that you probably were going to get everything you were looking for. So that looks good. But, yeah, I mean, you got huge volume. Unfortunately, almost all the time when you get this kind of monstrous volume, it just tends to exhaust the move for a while. So in options, not a bad deal to go ahead and take your money and then wait for the retrace. Hopefully you get one and pull back in. What are you thinking on this, other than you made some coin and rang the register and did exactly what you were supposed to?
I'm probably moving on at this point. I just, I did what I wanted to do, and I watched it, of course, because I obviously, made some money on it. But I'm moving on to other things. I unfortunately, I'm not doing quite as well with my Apple puts that I talked to you about. I know if you have any opinion on this move we've had in the last couple of days, if it has more legs or if it's going to play out here. What do you think about that?
Well, once it got to 465, you start getting a lot of short covering because a lot of people started shorting on that first move down, and that was the problem on it. Of course, what did you have? You had the big guy in Wall Street, the guy that has been the axe, the one that has made huge amounts of money. Of course, this guy we're talking about is David Einhorn. He was buying huge amounts of this. In fact, he has, I think at the top, had $1.5 billion worth of it in his little fund. So, pretty activist guy out there, and he wanted to find a way. But I mean, when this guy was buying it, he was buying it in the 20s. So he still made a lot of money. But if you're a huge operator, have you ever read Reminiscence of a Stock Operator?
No, I haven't.
I would. It's only, I think you can buy it online for $12, but just a must-read for any trader. In fact, all the guys on Wall Street, when they talk about the best book they've ever read on trading, it's written in 1930, I think, 1929, 1931, something like that. Probably the best single book of history. It doesn't tell you how to trade, but really understand the market, and I recommend it highly. But when you have somebody that's a huge operator like Einhorn out here, what is he looking to do? He's looking for the stock to stabilize so he can start distributing stock. And one of the best ways he can do that is start, especially when you have $1.5 billion worth of stock, is start shoving it off into ETFs, especially ones that are looking for some kind of long-term payback. And that's basically what he's doing now, is trying to come up with these different ideas on how to pay back and get the money, $130 billion out of Apple that they have sitting on the sidelines. The problem is if they bring it back, they'll pay, to the United States, they're going to pay about 38 or 35% taxes on it. So there's no way that they want to bring it back that way. So they're coming up with all kinds of schemes to bring that $130 billion back over time and push it out as preferred stock, which is Einhorn's plan. And, of course, what does that mean? Something. And that's the question. Probably not going to get answered anytime soon. So maybe we'll see more people coming in. If this thing closes back below 465 on Monday or Tuesday, watch out below, because this thing is going to set up its ABC down. And, you know, when you look at this actually volume down, you haven't had anything approaching that first day down as we've gone back through that high. So the chart looks horrible. The problem is that you're having a lot of shorts squeezed. What did you have, April's?
June.
June. I think you got time. But what you need in the next probably 4 or 5 days is to see this thing close back below 465, and if it does, then you've got basically an ABC setting up. And I mean, you've got. Let me see if I can figure this out here. Maybe I can do it here. Expansions. Let me see here. Yeah, if we can call that the A point and that the B point and today's the C point. You've retraced basically 55% so far today. Maybe you get up to a 618 retracement, which is where that thing gapped up, which is where it's probably looking at going, which is about 490. I don't know. Are you watching on Tiger TV?
I'm just on my phone. I'm not.
Okay. You can go back.
Yeah.
You can go back. Yeah, you can go back on channel 14 and look at this. But there's a gap right there at about that 490 level. I could see this thing pop up there like on Monday and then pull back down below 465. At that point, you might get more sellers involved in this thing. But, you know, as far as the chart, you've got a high volume low. It has been untested. And so you probably got an 80% chance that you're going to get at least to 440, 450 retested at least. And I would say that that's sooner rather than later. So, but unfortunately, you could set up a move up all the way to 485 maybe, something like that, and then start the next move down. If this is the high today, and we start selling off, especially with the slight volume today, if we start heading down on Monday, guess what your 1-to-1 would be? 398.82, and there's a whole bunch of things that keep setting up right around that $390, $400 mark on Apple. Really makes me think that there's so many things, road signs pointing to it, that it would not be impossible to see that happen. Unfortunately, I think you had the 400s.
Yeah.
Yeah, I would have liked to seen 450s, but I know how expensive they probably were even at the 400s. But yeah, you're probably not going to get much more. But what did you buy the original 400s for?
I have some at, let's see, what's the price now? I'd have to go back, and I want to say they're about $2.50 or something.
$2.50?
Yeah.
So you probably won't do too bad. They'll probably, my guess is that if you've got 30 days on them, they'll be worth $15.
Okay.
So, you know, when they cross 400, probably 15, 50, something like that. Just a rough guess. So, you know, you take $2.50 and make $15 out of it, not a bad deal. But you need to have at least 30 days as it goes back through there. Those are on the Junes.
Yeah.
So what do we have out here? February, March, April. I mean, you've got plenty of time. You got an early expiration on that because Friday. Well, no, you don't. You've got that June 22nd. So you even got a long part of that month to go through too. I like to play. $2.50, good asymmetrical bet. Nothing else to talk about, I guess, unless you want to talk about another stock.
Just really quickly, Baidu. I think you've talked about it before. Just I have some. They're actually June 100 puts on that, and it's obviously that I'm in the money on that. I just don't think that's going to keep going down or stabilize there.
I think as long as China doesn't repent on giving the data eventually, in fact, if I was Yahoo or Google or any of these other stocks, I'd be out marching up and down the street saying, you know, I'm not going to give you my books. Baidu doesn't have to. All these other all these other horrible companies from China don't have to. I'm not going to give you my books either. And I'd probably do it on a Friday night and recant before Monday morning. But I'd make a big play out of this and put the pressure on them. If they were my competitors right now, I wouldn't be as quiet as they are. And say, you know, for all I know, they're a fraud. If they're not going to give you all of the books, can be a problem. But if you've got an ABC out of this one, you know, you've got a nice setup on this. Retraced basically 59%, and a 1-to-1 ABC takes you down to $66. So you've got huge volume down, and unfortunately, exactly what I was talking about, huge volume down, normally means that you exhaust out, at least for a few days. This thing could get back up into this, 103, 104, if the market starts moving up on Monday. If the market rolls over, basically I'd be holding on. What month are they?
They're June's again.
My God, I think, you know, is if with this market rolls, you're going to have at least 60 days on the downside, and you're on the right side of this, and the market is still going up. So if this market rolls like it should on Monday or Tuesday, you're great. If it doesn't, might be a good time to take your money.
Okay.
So anyway, you have a great and wonderful weekend. We got 3 minutes left here.
Right, take care of it.
You bet. So he's doing some awful good trading out there, Brent from California. I have to pay a little bit more attention to him when he calls in. Anyway, wanted to talk a little bit more about Seagate. We're looking at this. They've basically had some problems. The luxury that they had because a lot of the production for hard drives got wiped out, a year ago now. They're finally reaching the level of how much margin they can continue to hold. And I suspect we're going to see a margin crunch, much like we saw in Apple. You know, this thing kind of blew off a little bit last week. It's coming back up and to fill that high. Again, very light volume in Seagate. Of course, you look at Seagate, you want to look at Western Digital, WDC. Now, this one probably just a little bit better, but you know, you've had high volume, high. We're going to go back and retest that. You can make a claim that we're into that candle today with very light volume, but a lot of these might be setting up. Seagate would be my guess out here that basically is the weakest chart This thing did go above previous highs. It did go higher with higher volume. You did have a high of basically 15 million shares. You can make a case that this thing blew off today, and that is it on Seagate. So we'll have to see on Monday whether we get confirmation on that. Also, we're looking at Wynn Resorts, another one of these that actually is breaking previous highs on higher volume, but not really climbing through those highs. This thing is pressuring these. Probably see some kind of resolution by Monday or Tuesday on this. Symbol is WYNN. Of course, they came back on fairly strong issues in China, and really unclear to see how that was. Kind of, let me put it this way, it's murky. And we'll continue to keep an eye on those. Just seeing if there's anything else out here moving. McDonald's, MCD, see what's going on in them. McDonald's to me is always, after it blew off that top at 102 in January this year, probably going to be under pressure for many years to come, as long as corn, of course, that feeds beef is a issue. Came up and kind of had a counter move up here, but it has broken that last major high that had 7.4 million shares. That was October 17th. What do we have up here? Lighter volume. It's back into that trading range. What you want to be watching is the close. Any close below $94.16 would be a false breakout. And on lighter volume. So we have to be watching a lot of these stocks very closely over the next couple of days. Today, not a whole lot of volume out there, and probably for the snow. So I'll give you a mulligan on these today. Monday, Tuesday, I will not be giving you a mulligan. I'll be saying lighter volume, run, but this may be the end of the bounce out of McDonald's. And, of course, especially their sales dropped more than anticipated. News out today. We will be back in just a minute. Maybe look at Boeing here.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Great moments are born from great opportunity, and that's what you have here. The opportunity to answer the questions, should I buy or should I sell? Should I be in or should I be out? Hi, I'm Steve Rhodes with TFNN, and I produced a free report, Reading the Message of the Markets, where I'll teach you how to use a set of tools that will answer these questions. Go to the homepage of TFNN.com right now and download Reading the Message of the Markets. This free special report includes step-by-step video examples that would have had you out of the market before the crash of 1929, before the crash of 1987, and would have had you back in the markets buying at the bottoms. This set of tools works on all time frames and all instruments. This set of tools will shape your trading and investing future. Folks, this moment will never be here again. The only cost is not taking action. You were born to be a money master, and the time is now. Go to the homepage of TFNN.com and order Reading the Message of the Markets.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we are back. Again, you've got a couple minutes here if you want to give me a call. 877-927-6648, 877-927-6648. And we'll be taking a look at what's going on there. Talked a lot about Boeing over the last few weeks. Just an interesting case study. Probably not going to make a lot of money on it. But a lot of times you can learn, some people say, a teachable moment. The Boeing company, BA, has got orders for about 800 of these 787s. What we have found out over the last 2 days is the FCC, I want to say FCC, it's the FAA, has basically said that the battery is the problem. Well, they're not exactly sure if it is a overcharging issue or whether it's a materials issue. Basically, Boeing is saying it is a materials issue with the battery. But in any case, it is limited to the battery. And all they'll have to do to recertify it is get that part working. And most people are saying, okay, so maybe they have to delay, a couple of these 800 planes 2 or 3 months down the road. They don't have to stop building the planes in the line. They'll probably, maybe they're delayed a little bit, but not a big deal. They'll be able to retrofit any fix, even if it's charging at a lower level. Most likely, it is a materials problem with the manufacturer of the batteries. There are a lot of people, well, there's other people, let me put it to you, that can go through these. And, of course, it's been an issue with these lithium-ion batteries. Most people don't even remember Apple had the exact same thing in their MacBook Pros. The lithium-ion batteries were burning up in airplanes and causing fires. The lithium-ion batteries, when they discharge, give off oxygen. In a sealed environment, you get enough oxygen, and you get an Apollo, 8, where everybody burnt up in the space capsule. Pure oxygen saturated, always an issue. The boxes that hold the batteries, if you saw it, did contain the fire and burned up. And so if they can basically sort out some of these issues, maybe a better way of testing these batteries instead of believing the testing that's supposed to go on from this China battery company, it would probably be a little bit, A1 went up, which was a problem. Actually, Tesla has been going up a little bit on this because Tesla has been saying, we're going to sell you our batteries, and we've made these batteries for our space launch. You do see Tesla up here testing high. Not a good time to be buying it. Actually, it is going above its previous high out here and giving a nice little, maybe a nice little inverted hammer up here at the highs and retracing. But about looking at 2.5 million shares to the 1 million here. But this last little row has been a lot on whether or not that they can sell these batteries that they've developed for both their cars and for aviation that are sealed. Another company in the same space is General Motors. They've taken up that area that A1 was doing, and it's going to be a spinoff from General Motors. I'm not exactly sure when, maybe in the next few months. But they've made special batteries that are concealed or contained in packets, so that if a car is in a accident, they're basically able to burn off all the power in it so it doesn't cause a fire. So there is some technologies that will solve this, but probably some growing pains from them. But Tesla getting some good prints off of it over the last few days. Anyway, keep a eye to the sky. I'll be back Monday, same bat channel, same bat time. We'll be in the second hour of the Tom O'Brien Show tonight, talking technology. Have a lot of things to be talking about. We'll be talking more about X1 and some other things going on in the marketplace. See you then. And Monday, same bat channel, same bat time, channel 14 on Tiger TV.